podcast with Investing Education Academy. And I first and foremost want to say um, happy Black History Month. And, in addition to that, it is important for all parents, family members, friends, cousins, nieces, teachers, that you're teaching aspects of Black history. It's a part of our culture, and we don't want it to just be lost. With that being said, we are going to be talking today about not only our trip to Ghana, but we'll be talking about a part of American history, the stock market. So we're going to be doing an update, and this is the balance, right? We're going to be talking about part of our culture, visiting Ghana, spending time with people from the diaspora, and then we're going to talk about the American history of the stock market. And so they don't have to live separately; they can live together, but neither piece should be forgotten. With that being said, you all may know that Leon and I recently took a trip to Ghana. Investing Education Academy has a private group or a membership. It's called Portfolio Panthers inside of the Investing Education Academy platform. The Portfolio Panthers are a group of individuals that we actually invest together. We invest in private equity deals, which are startup companies. We invest in real estate. We invest in commodities, just whatever may come up that makes sense for us to make money is a possibility for us to invest in. Um, and that group, we had an opportunity to buy some property in Ghana about 2 years ago, and it's prime real estate, it's beachfront property, and we have gone back several times to just make sure the construction we're doing on the properties went well. In addition to planning what's next, we looked at some additional real estate investments in Ghana, and yes, not all real estate opportunities are in the United States. There are many investment opportunities abroad, and people who feel like the United States is the only place to make money in the real estate market, it's probably because you haven't looked at international real estate. And one of the pieces is the beachfront property that we purchased. I think within 18 months, if I'm not mistakenly, we had 100% increase in value of that property.
Yeah, yep, 100% in less than 2 years that we bought it. Um, it was, yeah, as Brent said, it increased by 100% in value. And like Brent said, America. I mean, Brent and I are Americans. My family's from the West, from the Caribbean. Brent is from the South.
DC.
DC, yeah.
DC, North Carolina.
DC, I was like DC, North Carolina, some of the South, and but through our kind of our travels, and especially through IEA, we've learned, as Brent said, there are many. I mean, I'm not gonna babble, but from what we saw in Ghana, the returns people are seeing, the real estate investment opportunities, land and actual real estate, homes, condos, things like that. I mean, the appreciation that we've seen. Brent and I first went 2 years ago, and then we went again this past week. I mean, we were there for first 2 weeks of February. I mean, just the appreciation value, the appreciation that we're seeing in properties in Ghana right now, at least this moment in time, is far outstripping the United States. Now, we know we've had this big bubble in the U.S. since COVID. I think homes have gone up like 30-40% since COVID. But, similar or even greater appreciation is happening in Ghana. And literally on every corner in Ghana, especially in Accra, the capital city, there's construction. I mean, it's condos, it's apartments, it's homes, it's office buildings. Like, it is unbelievable, the build up that's happening in Ghana right now. And just one little factoid is that I think it's by 2050, Africa
population.
Africa. Well, in the United States by 2050, the United States is projected to be majority. But in Africa by 2050, I think Africa is supposed to enter like the top, I don't know, 5, 10, whatever of global economies. Basically, between now and 2050, Africa, the whole continent's economies is projected to double or triple over the next, let's say, 20 years. So, I mean, and we saw why that. I mean, we're not saying it will happen, but Brent and I saw firsthand why those projections are happening, because we saw firsthand the construction, the build out, the infrastructure that's being put into Ghana right now. It's crazy, it's insane. So I say all that to say we were there recently to check up on the property that we have there. As Brent said, we had some construction that was worked on in the past. We went back to kind of assess what we're going to now build going out in the future on the property. And the really cool thing about it is we saw our neighbor who was building out a awesome restaurant right on the back of his property, which is essentially right next to ours. So anybody that goes to our property will have a fantastic, freshly built restaurant within feet, which is really cool. So
literally 80 feet away.
How long? How far?
80 feet away.
80 feet away. Yep, 80 feet away. Breakfast, lunch, dinner, Ghanaian food, American food, foreign food. He does it all. So, and then we'll kind of bring that story to light as we kind of finish or get the build out started.
And also real quick, we have another neighbor who purchased property on the other side of us, and she's from Detroit. And so, we're not just talking about things that might be happening. We're meeting the people. And for just the kind of context, where Leon and I stay, and if anybody wants to know like where we stay, what we do when we go there, go into Investing Education Academy's platform, and we're happy to tell you like what we do in Ghana and how we navigate. But one part that you should know is that the location that we stay in, consistently, you see nothing but people in and out renting these units. I mean, I don't think there's any time where we're walking out of the building and we're not seeing 4, 3, 2 new people coming into the space, suitcases in hand, children in tow, significant others in tow. It's just like, it's really one of those situations where the rental market is strong too for certain properties. And you have to know the lay of the land. You can't just go anywhere. You have to know what you're investing in, who's the builder, because the same way Leon's talking about is construction on every corner. Every other corner has an abandoned building. Mm-hmm. And, it's so many projects to get abandoned because people don't know what they're doing. I mean, just call it what it is. There's a lot of reasons behind it, but that's what it boils down to. Be it money, resources, goods, whatever it might be, it boils down to improper planning. So you have to know what builder you're going with. Why is that builder reputable? How does paperwork transfer? Because again, we took a trip out to the Central Lands Commission, and when you walk into the building, it's not what you would expect from a government building. And going in and getting your property transferred to your name is an experience unto itself. So just understanding like who the players are, how to navigate is really incredible. And I'll liken it to this. When Leon and I take these trips to Accra, for me personally, it's like watching Washington, D.C. get built. Mm-hmm. And the question is, what side of history will you be on? Are you going to be, the person who's like, I always wanted to go, always wanted to do it, but it was never the right time. I never had the right people. I never. Or you can be the person like, you know what? Yeah, we connected with Investing Education Academy. They gave us the information we needed to have a trip that was very fruitful, had historical relevance, and possibly was very profitable. And to that end, we're meeting business owners over there pretty consistently now. And most recently, we met with Scholaticus. And so he might even be watching this. If Scholaticus is watching this, please put into the comments the name of your touring company. And the reason why I know he might be watching is because we had a meeting like 2 days ago. So we're meeting people with tour companies. We're meeting people who own property. We're meeting people that can serve as general contractors. We're meeting Dickinson, say it correctly. And, we're meeting real estate agents. We're meeting developers. So, and that's not even going into the artists and the jewelry makers, shout out. I forget the name of the company that I got these from, but she's been one of the jewelers that I go to every time I go to Ghana now. And
right on the beach.
Right on the beach. And so if you want to know what that is, please go to Investing Education Academy's Facebook group, and we can have a whole talk about Ghana. So from an update standpoint, those are some of the things we wanted to say. Leon, I want to give you the floor before we move on to the stock market about anything you want to say related to Ghana.
Last thing I would say, like Brent said, I think you said it was like DC being built, you said?
Yeah.
Right? So for me, it's I look at Ghana almost like, so my mother's Jamaican, and so I look at Ghana like what Jamaica was, 70 years ago, before the whole tourist boom thing really happened, because they have some beautiful untouched beaches there. Some that are so beautiful. I mean, like not every place is perfect, but some, I mean, Jamaica is the same way. They have beautiful beaches and some that aren't beautiful. But Ghana has some really, really beautiful untouched beaches. And kind of touristy thing about Ghana is starting to pick up now. Like Brent said, where we stayed, we saw people coming in and out daily, checking in, checking out, checking in, checking out. So, I could see in the next 30, 40 years, Ghana being a really, really big tourist area, a place to go for the beach, culture, and entertainment. So,
yeah, and we met people from Belgium. We met people, a lot of people from the UK. I think it was majority UK. We met people from the US, Ghanaians who had relocated to the US who are now thinking about moving back. I mean, you name it, we met them there. And so it's not just people from the US going. Trust me, it's definitely not. A lot of Nigerians. We met a lot of Nigerians there. People from South Africa. It's not just people from the UK and the US who are paying attention to that west coast of Africa.
And there's a reason, because it's right now there's a really, really big investment opportunity in Ghana. They're really, really opening. The government is asking for, as they call expats, or not expats. What is it? What's it called? The return home or something?
Yeah.
So they're asking basically people of African descent to come back to Africa, Ghana.
Those from the diaspora.
Yeah, from the diaspora to invest, get get in touch with your roots, that sort of thing. So it's a very, very, very welcoming country. People are very nice. And we always have a great time when we go. So
yeah, and we're going to be putting pictures from the trip into the Investing Education Academy group. So if you all want to see some of the video, I mean, we met bands, so we're going to drop a little bit of their music in there. You may have seen some of the lives. Just in general, we're going to put some of the content into the group so you can see. If you're watching on LinkedIn, we have a Investing Education Academy as a group on LinkedIn. We'll put some pictures and things in that group as well. And of course, Instagram, we haven't forgotten about you all. We'll be posting pictures and videos along the way.
Yep. All right. So enough about Ghana. So that's where we've been the last month, because our last podcast was a month ago when we were kind of preparing for the trip. And then we were there for 2 weeks beginning of this month. So that's where.
And we meant to go live there. I promise you we did. Yeah. But I forgot.
I totally forgot. And also the time difference is Ghana is 5 hours ahead.
Yeah.
So that whole time difference thing really can throw you off when you're actually in the country. So yeah, we dropped the ball on that this time. But okay, so let's get back to what we're all kind of into here is the stock market. So I want to give a little recap since we last were on. Last time we were on, our last podcast was actually about, I believe it was about marijuana stocks in general. Well, the marijuana entry, and strictly because at the time how the government had downgraded it from a stage 1, I think a stage 1 to a stage 3 drug, which put it on par with, like, I think it was like ketamine and testosterone. So that was something. So if you haven't seen that podcast, we did that a month ago, go check it out. We broke down why, I mean, marijuana stocks have been terrible the last 5 years. But this new change, you always want to get ahead of things. So this new rule change may or may not, we'll never know until it happens, give, a bid to some marijuana stocks going out in the future. So check that podcast out, or do some research on marijuana stocks. Now to today. So what's been going on in the market the last, say, month? We've had a good year. So as of right now, I'll just give you a quick quote. The S&P 500, which is our benchmark, is up about 6%. The NASDAQ, which is mostly tech stock, which a lot of us are in, is up about 8%. So remember, the stock market on average returns 10% per year. So we've had almost a year's worth of gains in the market in a month and a half. Will that last? Who knows? Again, we never know. But what's been driving this really is this whole AI boom. So I equate it to what I'm kind of dating myself, and some people here may know on YouTube. The .com hype back in the 90s. I mean, if you just threw a dart at a stock and it went up 30% per day, and I'm not even joking. Like, that literally happened.
Day after day.
It was ridiculous. Now the difference about that is then those companies had no profits. A lot of them had no revenue. A lot of them barely had a business plan. It was just this hype around this thing called the internet that was going to change the world. Well, now we're seeing that same hype around AI. Now the difference is the companies that are leading this boom have profits and revenue. They're the biggest companies in the world. Number one is Nvidia. 2 is Microsoft. 3 is Facebook. Those are the 3 main, and 4 is Google. Those are the 4 main, I guess, AI related companies that are really moving the market higher. You may have heard this term called the Magnificent Seven, and that covers Amazon, the ones I just named, plus Tesla
and
Amazon.
like the FANG and all those.
Yeah, it was like FANG a couple years ago. Now it's the Magnificent Seven. They've been powering the market higher based on this whole AI thing. And one of the craziest things today, Nvidia reported. So a couple months ago, Nvidia kind of started this whole thing a couple quarters ago when they reported. They put their earnings out, and then they've raised their guidance for the next quarter sequentially, like quarter to quarter, by almost 100%. That doesn't happen, right? Companies don't make 7 million in Q2 and then make 14 million in Q3. That doesn't happen. Nvidia did that because the demand for their chips are what is powering ChatGPT, Google's Gemini, a lot of what Facebook is doing. It's the Nvidia chips. So Nvidia is really the kind of the engine behind this whole thing. They reported today, and their revenue, again, this doesn't happen, was up over 240% versus last year.
That's insane.
Yeah, like typically revenue year over year, 10 to 20%, awesome. Nvidia's was 240% year over year revenue growth. Their profits were up, I believe, 100%.
And that profit thing is an important word.
Yeah, literally.
We're not talking about just projections.
These actually happen. Their money they put in their bank account was up about 100%. Their revenue was up over 240%. So this and again, remember the .com days, it was all hype, right? There wasn't really anything behind it, but projections in the future. These companies now are making serious money on this AI thing. So AI has been powering the market higher the last couple, really since last year when ChatGPT came out in November of 2022. If you're not in tech stocks, especially these Magnificent Seven, your portfolio probably hasn't done that well. I'm not saying you're not up, but you probably haven't done that well. I would say you definitely want to look to get into Google, Amazon, Facebook, Meta, Nvidia. I mean, to me, Nvidia is the one. Nvidia is the engine for all of this, right? So all these other companies are running on Nvidia's chips. So no matter what happens with their services that are running on top of these, Nvidia is going to make money. So to me, Nvidia is the number one play in the AI space, and their revenues and profits prove that out.
And I liken Nvidia right now to Qualcomm in 2003. 2000 from 2000 to 2003, Qualcomm had the patent on, what was it called?
CDMA.
Yeah, CDMA technology. And that basically is the chip that converted signals in all these cell phones. Was being, no matter who put the chip in, no matter who did the technology, they had to pay Qualcomm for their intellectual property. And so they made money no matter who was winning. And that I liken Nvidia right now to Qualcomm back then. And I'm telling you all, if we did a podcast maybe 3 years ago about the amount of money you could have made in Qualcomm if you had invested and stayed, and it was sick money. It was ridiculous.
Yeah.
So
yeah, I mean, that's a good point. Some of these times where these companies go beyond the hype, and now Nvidia is beyond the hype. Qualcomm back then was beyond the hype, because again, they're generating revenue and profits off of these actual products. So it's not just eyeballs, it's not just page views, page views, all that craziness in the .com days. No revenue behind it, no profits behind it. These companies are making serious money.
Yeah.
So if you're not in tech, which I wouldn't be surprised because tech got destroyed in 2022. A lot of people got burned, Brent and I included. But we did kind of we paired some of that back, but we did get, everyone felt it. So if you're scared of tech and you weren't in tech in 2023, your portfolio is likely underperforming. I'd say at some point you want to kind of work your way back into tech because Nvidia is giving a story of the projections right now for AI, the underlying technology, and AI encompasses many things: the chips, the cloud, and the applications. So the chips, of course, NVIDIA, AMD are going to be the top two. The cloud is going to be, of course, Amazon, Microsoft,
Google.
and who's the third?
Google,
right? Google. Those three. And the applications are also going to be some of those companies. But those two, the chips and the cloud, are, I mean, the companies are talking. This is a 10-year run rate on the revenue, on the growth of these. And the industry is saying that this could top $1 trillion with a T, $1 trillion market. The amount of revenue that these AI services, products, chips, everything underneath AI is going to generate over the next 10 years. So again, it's not hype, it's not BS, it's not eyeballs, it's not click rates, it's actual real deal money. So if you've been scared of tech recently, I'd say take a good look at getting back in those big names. There are a lot of other companies that are smaller underneath the big names that are actually, some of them are actually outperforming the big names. And we'll be reporting on some of those inside our membership platform this week and the next week. So that's one thing. The other thing is inflation. So inflation's been coming down. It peaked at 9% in, I don't know, a year and a half ago. It's down to about 3% now. The Fed actually said in their notes a couple months ago that they're going to actually cut rates this year. Why is cutting rates important? Because when you cut rates, money becomes cheaper, right? Like people can take out loans, they can buy homes, you can credit cards, money just becomes easier to flow through the economy. Right now, rates are high, so money is not flowing through the economy as much. So inflation's been coming down. Fed's been loving it, but last month, so the report for this month, reporting on January, inflation reared its ugly head again. It actually popped up more than expectations. So there was a thought on Wall Street, not from the Fed, that they want to start cutting rates in March. Not happening. The Fed has been like, even before this pop in inflation last month, the Fed's been like, no, we're not doing that. Like, it's too soon. So right now, Wall Street is betting the first cut will come in June of this year. Again, these are just speculation by Wall Street. The Fed doesn't even know when they're going to cut rates. They're just going to follow the data. They want to see inflation get close to their 2% target. Right now, inflation is at about 3.5%. So there's still a 1.5 to go before it gets to this 2% target. So they're not going to cut rates until it starts getting closer to that. But Wall Street, doing what Wall Street does, they always get over their skis. They're saying they were actually projecting 6 rate cuts this year. Wall Street was. The Fed said they may do 3. Now they say they may do 1 or 2. So again, it depends on the data. As long as inflation continues to drop, at some point this year they will start cutting. But what happened last month when inflation actually popped up again, they'll just sit tight and let the rate stay higher until like the froth gets out of the economy. So the reason that's important for the stock market is the market again is hoping the Fed cuts rates because that'll make borrowing money easier. People borrow money to buy stocks that can help push the market higher. So we'll see if we have a little bit of volatility in the market. We've actually had some in the last couple weeks, and especially when the report came out, the CPI report came out showing inflation popped up. The market dropped, 1 or 2%. So we may see some volatility over the next couple weeks. But I will say with the NVIDIA number that came out today, the market took a sigh of relief because had NVIDIA missed their number, man, this market would have probably crashed and burned. Because again, NVIDIA is the engine for what's driving the market, which is AI. And NVIDIA hit their number, they raised guidance, so things look good on the AI front right now for the market. So we'll see, but that's kind of the recap where we are right now through mid-February.
And I just want to kind of point something out. Like, we're talking a lot about NVIDIA and how it's moving the market, and all of it is true. But you also want to think Meta recently announced that they're going to be paying out a dividend, which is huge.
And real quick, huge. Brent and I, we were in Ghana when this happened, and I looked at it. I brought it to Brent when we were out at a restaurant somewhere. The stock was up 20%. I think it was up 20% the day they announced the dividend. 20%. Meta on top of their dividend they're paying. So, all right, good.
Yeah. So you have to think about that. And I mean, so I'm just simply saying other things are happening in the market. Also, too, when you look at the biggest competitor to NVIDIA, you're looking at AMD. Right now, I think personally, in one of my accounts, I may have purchased NVIDIA AMD about September of last year. AMD is up 60.39% for me. Again, individual results, it might not be the same for everybody. I purchased it in September of last year, so it wasn't a timing the market situation. I just knew it was a good investment. And then Nvidia for me right now, I purchased them at the same time, is up about 50.1%. So AMD is actually producing a higher return for me right now based on the time I bought it and Nvidia at the same time. So just don't think it's just this one play. There and also to portfolio balance. We're not gonna go into that because that's too big of a topic. But when Leon is saying, you all might want to revisit the tech um, sector, you also want to make sure that you have a balanced portfolio. That means asset allocation models and all this other stuff that we're not going to, bore you with that. But simply saying, don't just go, okay, I watched IEA, now I'm going all tech. Like, no, like you still want to have a balanced portfolio. You still want to have some healthcare in there. You still want to have some like large scale industrial. I mean, you want to have a balanced portfolio. But yes, if your exposure to the tech sector, especially called the something seven,
Magnificent Seven.
I'm still stuck with Fang. I'm like,
Yeah,
but
Fang is dead. Yes.
Yeah. So when you look at what's happening with your portfolio, make sure it's balanced. And if you don't have a way of knowing that, join Investing Education Academy. It's not even like a shameless plug. It's a reality. We are good at what we do. And I mean, I don't know if I shared this with you, Leon. I got a text yesterday morning from a person. I want to show y'all so bad, but I'm not gonna do that. But the text came in and said, I'm trying to find it. Give me 1 second. I know this is
while you look for that,
yeah.
just real quick quote on Nvidia. So Nvidia is up 180% over the last 12 months, and AMD is up 100%. So that just shows you again those underlying technologies that are driving AI. The market is crazy rewarding these stocks.
Yeah, and I found it. It says my Fidelity account is up 31%. I appreciate you. And so this is an account that, I mean, this is a text we got yesterday from some of the assistance we've given to some of our members in their account. So let's talk about what does that mean? If you had $100,000 in your account, you're now talking about having 131,000. What does that mean further? If you had an additional 31,000 from the amount of money, the 100,000 that you originally invested, and let's say you just pulled out the profit, more than likely, most people's cars or vehicles cost anywhere from $15,000 to about $70,000. Average person.
Mm-hmm.
If you would have just pulled off the profit of that investment that this person has had over the last, I say 14 months, they would be able to eliminate an entire bill. And just like most people's houses are, maybe 300,000. If they just pulled off a portion of that, you're talking about dropping it 1% of your house note gone, eliminated, just like that.
And here's the kicker on that. So what Brent said, like Brent said, if you have $100,000, you're up $31,000 over the next year. Because let me just talk taxes real quick. If that was over a year, right? So let's say 2023, 2022, 2023, you made $31,000. If you withdrew that $31,000, you would only owe $4,650 in taxes on that because it's a capital gains tax. And because it's under, I believe, $40,000, you only owe 15% tax. So you're going to take away, what is that? You're going to net out 26 grand from your stock account investment. But again, you're not paying 24, you're not paying 36%. You're paying 15% tax on that because you held it for a year. You made that profit within a year. It has to be with 366 days, 365 days plus 1 day. You only pay 15% tax if it's under, I believe, $40,000 to $45,000 that you pull out of your account. So, like Brent said, I mean, that eliminates your net now 26 grand and change. That's a bit. I mean, that's a huge bill. I mean, that's that could be like mortgage for a year, depending where you mortgage or rent for a year.
And let's go full geek mode. Let's say you have a credit card and your credit card is charging you 28% interest, and your credit card is a $20,000 balance. If you would have pulled out just part of the profit and paid the taxes on it of the money, you still have enough to pay off an entire $20,000 credit card bill, which at 28% interest, which a lot of cards are, you're now saving 28% annually in negative interest. And so Now you add that with the 31% you just got, you're over 50% return. I mean, again, we're just joking around with the numbers, but you all get what we're saying is, this credit card is going to grow at 28%. And you just eliminated, therefore saving 28%. Mm-hmm. So you essentially could add that to the profit, to the net gain. But anyway, the point is this: your money should be making money for you. Because even with what we're talking about, you still have the original 100,000 still sitting in your investment account, hopefully making another 30-some thousand. Mm-hmm. Within a 12 to 18 month period. Again, that's not normal returns. This is just a text that we received. We are not saying that everybody's rate of return is going to be that. You can lose money in the stock market. Please consult your financial professionals before making any decisions that you hear here today. But with that being said, it's definitely a place that has possibilities. Absolutely. And to that possibilities, we're going to give you 2 stock picks today that, if you use them, they could do well. And Leon and I, we say when we make these announcements, we're talking about a whole period between 3 and 5 years, and at minimum. And now we've heard some of your requests. Some of you all have asked that we start posting when we would sell a particular stock. And we kind of have been doing that by telling you all when we sell, but it seems like our community wants us to give like a very specific, we will sell it today type of statement. And so we're going to figure out how to do that without, breaking any compliance laws. Mm-hmm. And we're going to ramp up Investing Education Academy this year. And I hope you guys join and become part of that community because we're growing.
Yeah, and one other thing, so a suggestion made from another member, was showing the returns of some of our inside the community, especially the Portfolio Panthers. We let the Portfolio Panthers know when we actually literally buy and sell stocks, Brent and I, because that's, again, we invest together. But there's been a request a few times of the returns on our podcast stock picks. So, like, after this podcast, we're going to post inside our membership community 2 stocks that we're going to pick this week. So what we're going to do is we're actually going to go back and say, okay, what have been the returns of the stocks we've picked over the last, say, 6 months, 3 months, whatever. Just give an idea of some of the returns, because it's about accountability, it's about transparency. We're not out here espousing that we're geniuses, but like Brent said, we're pretty confident in what we do. And people want to know, like, how well have you all actually done when you pick these stocks on the podcast? Are they actually working for people? So at some point in the near future, we're going to we're actually going to report here on the podcast the returns we've seen, or the returns of the stocks we picked on our podcast have actually returned for members. And just anecdotally, we're not even members, just people who watch the podcast. Anecdotally, that I've heard from people, they've done pretty well. So we'll back it up with hard data soon.
Yeah. So for everybody, we thank you all for watching. We look forward to getting back on a regular schedule. We're still a bit jet lagged, but we're here. And to everybody who has commented on my Ghanaian outfit, yes, thank you for the comments. And if you would like to know where you can get some of this stuff, let us know. We have connections now, and we will be posting pictures and videos from our trip inside the Investing Education Academy Facebook group, our LinkedIn group, and we'll be posting some things on IG. Thank you for being with us, and we look forward to seeing you all again soon. If you're looking for our stock picks, you actually now need to log in to the membership platform to see our stock picks, and that's at www.iaamembers.com. Log in. If you're not already a member, you can figure out what package works best for you and join, and then you have depending on what package you choose, you have access to inside of our community. Have a great day.